We'll do a little bit differently this week since it's Super Bowl Sunday and we know we're probably going to get low engagement, and you guys can kind of review this on your own. I will be stuffing my face with wings during the game, so so don't count on me for anything besides this weekly call. So first things first, if you are joining us for the first time, you're watching this on YouTube. This is Gold Rush Gang, Gold Rush Options Trading. We are currently running a special where you can trade with us live, receive our trade signals, our weekly market review, which has become more of a kind of a daily market review, and all that good stuff. Full community, a bunch of algos. If you want to join, we're currently running a free trial. Just go to goldrushgang.net, click join us at the top, and scroll down to Fun Pass, and you get 7-day free pass of the full server. And beyond that, you'll get still access to some channels, what we call Gold Rush Lite, but obviously no algos, no call outs, no live trading, things like that. So just keep that in mind. All right, so let me just get right into it. Looking at SPY, if we look at SPY on a daily, obviously SPY's been puking since we received just really bad news with the taper and additional a higher basis point rate hike than initially expected. Really bad inflation increase. Obviously, job numbers are picking up a little bit, but nothing that's gonna really turn this thing around right now. And obviously, there's an escalating situation with Ukraine and Russia, which can turn into also Taiwan and China. So that's what's really, I think, driving us downward. Now, if we look at SPY on the kind of zoom out and look at SPY on a weekly, we've been forming this sort of broadening formation, making higher highs and lower lows for quite some time, ever since August of last year. This is it on a daily. It's kind of extreme, but these things have been playing out more and more recently, so I just wanted to highlight that. Now, if we look at the 10-day, 30-minute, then we can see that it's kind of been getting more. What that shows is really more volatility, right? So we kind of came to these upper extremes and pushed way back down. And on Thursday, we closed at around 441.62, but we made a low of 439, let's just call it. So right now we're at the bottom of the formation. Just because we're at the bottom of the formation doesn't necessarily mean that we're going to go back up, especially since we're below all of the moving averages. So let's just keep that in mind. If we look at tech on the daily, QQQ on the daily, pretty much same thing. My target for QQQ is down here to about 315. I think it has more downside, especially since tech has been the one that's ripped the most in 2020 and 2021. So I think this is like correction time. So I think we ripped down to 315, hopefully fast, but if it's slow, it's cool. And then from there, we can consider a bounce back up to the 786 fib. And then if we look at IWM, broad market, IWM did a nice kind of a bounce in the past couple of weeks, and it's above the 9 and the 21. Actually, it looks like it's closed at the 9 and the 21. So this is going to be an interesting level. If we kind of open up above it, which I doubt, then we can kind of see if we can hold it and start to turn these moving averages around. Otherwise, I mean, right now we're below it. And if you look closely here, you see that the 9, which is this white line, cross underneath the 21, which is a bearish cross. Whenever the smaller moving averages cross below the higher ones, then that's very bearish. Just pulling back. The 50's way up here. So we're below the 50, below the 21, below the 9. So we got some more pain, I think, in the market. So just keep that in mind. I'm going to go through this list that I have here. Partially, most of this list is a request from you guys, from the Watchlist channel. So if you're in our server, you go to the Watchlist channel, that's where kind of the action is there. So I'm just going to go through these very quickly, see kind of what I see. I like to be prepared for upside and downside. So that's why you see my charts kind of look, they'll all pretty much look the same when it comes to my targets. So for reference, this gold line is a 9-day exponential moving average. This 21 is the daily. Excuse me. This white line is a daily 21 simple moving average, and this 50. This is the red one is a 50-day simple moving average. All right. And then all my target lines are in white, and all of my kind of trend lines are in this blue color. So COP, ConocoPhillips, it looks like it's kind of triple tapping on this line. It's just facing this kind of really hard resistance here. If we zoom out to the weekly real quick, then we'll see that we've never really been at this level before. Going back to the daily, um, let me just fix this so that it's a little bit there. So going back to the daily, we can see that we've kind of touched this level a bunch of times and rejected from it. Um, but the nine has been the price has been riding the 9 EMA this whole time pretty much. If we just look back a little bit, we kind of flushed underneath it on these days and gapped up above it just to stay right above it. So ConocoPhillips has been riding that nine for quite some time. Let's see. Let's see if we can find the spot. I mean, ever since kind of the moving average is consolidated here, kind of just gapped and has been running ever since, right? So, so I see more upside for COP. I don't know how strong of a resistance this is. Obviously, it's kept us down for a couple of weeks, but it's really going to be a battle of this resistance line, this level here at 94 versus this 9 EMA. So my upside targets or the break of the resistance line is obviously is risky. So let me go ahead and label that just so you guys are clear on that. This is a risky entry. The reason why I think this is a risky entry is because of the fact that we've been at this level a couple of times in the past, right? One, two, three, four times, and we haven't been able to hold it. So really break and hold, right? We want to see a break and hold of this level with volume before we can work our way back up. But obviously take 94, get 95, and then 96. We can play even each dollar amount pretty much all the way to the top. Um, this 98.14 I got from a trend-based fib, so this is kind of the final target, 98.14. And then conversely to the downside, we got a risky entry of the level of 92.68. So pretty much all of the first entries you see are going to be the riskier ones, um, to the downside or to the upside, right? The first level you see are going to be kind of the riskier ones. Uh, Below this, and this is just this level. If you just look across the screen, you see kind of rejection here, rejection here, rejection here, rejection here, right? That's why that's my risky entry. The next level is the 9 daily EMA will catch up to the price pretty much at this line here. And then this is going to be the 20 where the 21 kind of reaches. And if you look across the screen on this, you'll see, support, 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 resistance, resistance, support, support, resistance. So this is a very key level, 87.19 for COP. Now, if we look at the chains real quick, uh, the February, I'm looking at this week's chains. So some of these moved, 150%, 160%, 230%. This 95 call looks interesting because it has obviously the most open interest out the money, with decent volume that came in 576. Now, if you know me, I like to play over 1,000 in volume. But if we wait for this to get up to 1,000, we might miss a move. So that's quite interesting. Nice, good delta with a relatively low theta to the delta. And we have a $13 spread, which is a little bit more than what I love, but it is what it is. If we look to the downside, I mean, there's obviously way more interest to the upside than the downside, just looking at the OI. But I mean, this 80 call, excuse me, 80 put for next week, I think that's outrageous, personally, to come all the way back down to 80. But maybe they're just looking for a big red day to kind of capitalize on that move and get maybe 100%er. These are super wide spreads. The best one on this side will probably be the at the money. The at the money is probably the best one, but I think there's more upside to this personally. Looking at the chains and also looking at the charts. Now, if we look at the March, which is what I'd rather play, March 18th expiration, lots of open interest and lots of volume came into the 100 call. Has a 10-cent spread and really good ratio right here. Now, we will say there's a little bit more OI on the put side. Obviously 75 I think is just ridiculous, but we do have about 6 weeks before we get there, so anything can happen. Now, if it does break down below the 9 and touch the 21 and doesn't do what it did here on this day where it kind of gapped and bounced, then we have more pain to the downside to touch this 80, this 50. It might meet it around here, this 82 level, 84 level around here, based on the trajectory of this line. So, but I mean, it's just been in an uptrend. It's been strong for such a long time. After this consolidation, it kind of just ripped So I don't expect it to pull back just yet for COP. So the next one on my list is XOM. XOM is one of the tickers that we're already in. I called out an XOM. Let me look at it real quick. Just a second. I'm looking at it on my phone. On what day was it? Gold mine. On the 8th, I called out an XOM. This week XOM. This week XOM 82 call. So the 82 call, which I called it out at 65, it gave you a much better price. I think it went down to like 15 or something like that, or 20, and it came back to between 79 and 84. So if you got in when I initially called it, then you're up about 30%. If you got in, if you kind of traded it up and down, then you could have gotten 100% quite easily on the 82 call for this week rather. The next strike that I called out was a 318.85 call. The 85 call, which is right here, I called it out at 1.1. It's currently at 1.4, so it's about 25% up. And again, obviously, it moved 100% in the day, so it must have been around 70 cents at the open. So you could have traded in and out of it, for the more advanced traders. Some of us, as we know, whenever you see a call out in the high risk of the gold mine channel, that's what we see at that particular time, but you might get a better entry or better price as time progresses, right? So that's the case for XOM, as you can see. I called it out on the 8th, which was this day. I called it out towards the bottom, towards the end of the day, towards the bottom where I kind of saw a reversal pattern forming. And it obviously didn't give us, the reversal, and it kind of pulled all the way back to this previous level at 77.76. And then from there, kind of bounced. Really, it pulled back to the 9-day, went underneath it for a little bit, and then kind of got up above it on Friday. So whoever played it on, you could have got a very, very nice entry on this day, and to take that reversal. Now, this reversal, I don't have really price targets for this. I think it's going to reach 85 by March. Let's just say that. And I think that it'll reach 82 by this week. I think it'll be back to 82 by this week. So that's that. Now, what I do like about this and what I want to point out is, and this is going to be just a little bit different than the other ones that I have posted because the other ones have very direct targets, but we kind of flush below these support levels here, and Keynes has tested 9, flush below the 9, and now we had a lower low on this day, right? So here's your low, here's your lower low, a lower low on this day, a lower low on this day with some buyers present at each low. And then on this day, where we opened, the second day of opening beneath the 9 EMA, we kind of tested the open of the previous day or the close of the previous day, and then gapped and broke above the previous highs. So now we have a higher low, right? And then we have higher highs. This high breaking out above these highs. So it's not necessarily a bullish engulfing, but it is a very bullish move. It is a very, very bullish move. Now, this 80.95 level is a crucial level for us to kind of get above because we have to get above these resistances here. And really, I want to see us kind of tear into this 50% of this downside move. So let me get rid of some of these fib levels. Get rid of some of these. And we're going to talk about fibs on this week's homework section on Tuesday afternoon. Tuesday evening. It's free for everybody. Around 8:30 p.m. Eastern time. Anybody who's watching this, whether you're part of the server or not, you can pull up on us and see how I use fibs, and also if we have anyone else, any guest speakers or whatever, can talk about how they use fibs. So I use the Fibonacci tool for different reasons, but for this reason, in this instance, I use it to measure this downside move. So we got from a high of 83.08. 83.08 to a low of 77.79. And so I use it to measure this is the full move, and this is the 50% mark right here at what is it, 80.46, right? Now I want the stock to trade above this 50% mark. We can even just go above this 80.62 level, just to kind of round it out. Previous resistance here. Once it gets above these levels here, then we've already retraced half of this move. So this downside move would kind of be over with based on the upside retrace of this downside move. So that's what I'm looking for. I'm looking for it to trade up here at this level. So don't be surprised if I call something else, although our original calls are still intact. Obviously, the 218.82 call is now much riskier since we only have a few days before it expires. But uh, the 83 or the 85 rather, the 85 for March, I think is well intact and well positioned, especially with everything that's going on in the world, that's driving energy prices up, right? So that's XOM. Not much else to say there. MRO was a request from somebody in the group, but this was also on my list. Also on my list to kind of review today. Now, MRO is another energy ticker, Marathon Oil. I've been tracking MRO for a very long time. I'll go ahead and pull out to the weekly so you can kind of see where we had some levels in the past. So I've been in and out of this. Now, one thing that I do want to know is look at this kind of shoulder down here, pulled back to this level at 1404, came all the way down to a low of $3 for COVID low, which is wild, right? And then pulled right and then worked its way. Obviously took some time. This is the weekly, but it worked its way right back up to this level, this neckline here, and then came back to this level to form the right shoulder. And then it kind of broke through with gusto. Look at these candles. Look at how these candles kind of gapped and moved up, right? Right through this line, consolidated, kind of battle between buyers and sellers for these couple of months, and then gap down, pretty much came to right where the resistance level was. The previous resistance became support, and then it kind of worked its way up, and did a bunch of nice bullish, like super bullish moves in between. So now on a daily, and then one more thing that I wanted to note is that it's very difficult. Let me just zoom out a little bit more to make one more note. Yeah, I mean, like I'm looking at the weekly. Let me look at the monthly real quick. Okay, so the monthly gives us some more upside targets. So that's interesting. Um, okay, so I didn't look at the monthly before doing my analysis. I was just looking at the weekly. Price has memory, so we're gonna think about reaching some of those previous monthly prices. I did have to draw a trend-based fib, so I'll redraw it now for the benefit of the community. So let me just get rid of this one. So this is something else we'll discuss on Tuesday's homework session, what this does and what it means. And let me just go to the weekly so it's a little bit clearer. Okay. So I like to grab the beginning of the impulse move and then kind of where it peaks and then where it finds support. And that's how I draw a trend-based fib. I like to do my fibs on a weekly because the moves are much clearer and they play out a little bit better on a weekly. So this particular Fibonacci level, you can see that there's, you see the reactions right around some of the key levels. 50% acts as a support here, 61.8 acts as resistance, right? So you see the reaction. Now, that being said, I drew some of my levels, my downside targets and upside targets based on a trend-based fib, and just based on some previous levels. So to the upside, and I think, and I'm biased to the upside on this, FYI. If we look back at the weekly, we're gonna have to do the monthly. Let's see. Yeah, maybe not. Let's do the weekly. Yeah. All right. Well, anyway, some of these levels are just mathematic levels. Yeah. They're very clear mathematic levels. All right. So for the upside, we have. Let me just make it a little bit more clear. Okay. So for the upside, we have I put 2231. This really should be 2230. That break of the round number, psychological level, 2230. Will give us our entry into kind of this region up here. Now here I just did, I did kind of even numbers. I did 23, 2350, 24, and then we can call it 2450, or I just rounded up to the 1618 trend-based fib key level. So that's my final upside target for this before we start to pull back for real. Maybe the conflict's over. Maybe they're gonna start regulating oil prices so we can pull back a little bit, right? Whatever the catalyst is at this level. So these are kind of just a measured move level. If you go back to the monthly, or if you go back to that those charts where we've been here before, then you can find probably some more direct levels. But I would dare say that some of these levels line up well with those. Now, for the downside, this 2133 is kind of where the 9 EMA will be tomorrow. 2066 at the 100% fib retracement level. 2008, which is kind of where the 21-day EMA SMA will line up tomorrow. Actually, this is probably going to be a little bit higher, probably like right here, 2018 or so, right? Give it a little bit of room to move up. So you can play these key levels up and down. And we got the 50-day EMA right here. So these are your levels. I would play these white levels. I would ignore this 61.8 on this because there's just another, the 50-day I think is a more powerful level than the 618 fib. So looking at the chains, I think there was one in March that I really liked. Let's see. So the 2250 for this week has good OI, good volume. Volume exceeded OI on the at the money, in the money, and at the money. Both move pretty well, and very, very tight spread, which I love, right? Looking at the put side, I mean, there's not much juice on the put side. I think this 20 put for this week is decent, although very, very out the money. I mean, $2 move to the downside out is super out the money. Maybe you can day trade that if you like it. If you do want to day trade on the put side, I'm bullish, so I would stay as close to the money as possible and take profit as quickly as you can on the downside moves. I want to look at March monthlies. I think it was this one, 25. I think it was the 25 that had my interest. Oh, actually, it might have been this one. So either way, the 23 has the volume exceeded the open interest on Friday. I have a 4-cent spread between the bid and the ask. The delta and theta ratio on these are so good on these oil tickers. I mean, what this tells you is that these don't really move much. For a full dollar move on MRO, you'll get 46 cents on the premium. And for every day that it kind of remains flat, it's a 2-cent fee, let's call it. So I mean, looking at this, it just tells you that it doesn't really move too much. Not like, for example, like a Tesla or like a Zoom, where the theta is always way higher than the delta is, especially on the weeklies, right? Especially on the weeklies. But anyway, I like this one. I like the 23 call for March. I also like the 25 call for March. It's a little bit further out. It's obviously a little bit less attainable. And the payoff on this 23 call is much better than the payoff on this, personally, on each dollar move. But as you know, the Greeks fix themselves as the strike gets closer to the money, and it's easier for you to get 100% on a $60 contract than it is to get 100% on a $118 contract. So if you want the percent gains, you could load some of this. If you see potential for it to move in that direction by March 18th, then either the 25 or the 23, whichever one you like. That'll be your play. All right, next one I have is USO, which is another energy ticker. This one is I found this one to be interesting because I had to. Now, what did I do with this? Let's see. I'm gonna pull back to the monthly. Yeah, that's what I did. Okay, so I went to the weekly and I saw some of these previous levels here, all the kind of the pivots and the ends of the wicks is how I got some of these levels. Now, these levels are quite extreme for it to, I only have them highlighted for about a week. They're quite extreme for a weekly play. So what I would say is just start thinking about, keeping some of these levels on your chart. If you want to play USO, keep it on your chart for the next couple of months. Obviously, we're not going to get to 85 this week. But we could get to 85 in a couple of months if it's bullish enough, right? So, your first entry would be the break of day high, which is 66.34. 66.34 would be the first entry, the risky entry. Let me go ahead and label that risky entry at the break of day high, right? Now, some of these levels are just previously measured, but I'm gonna go ahead and keep it pretty tight. Keep it pretty tight to the current price so that we're not going crazy. getting overzealous. I don't want you guys playing, 75 calls or whatever. Maybe the 70 calls more attainable, not so much 75 right now. Um, so so risky entry, and then you have some previous levels of resistance and support here at 68.32 and 70.47, which is a key fib level on a trend based move. Again, this is another trend based fib. These gold fibs um, are a trend based fib, right? We had the impulse that started down here, found its peak, and then found resistance, found support down here, and now we got Fibonacci's to go along with that move, right? So that's that. We'll talk about it more again on Tuesday, as I mentioned earlier. So risky entry. Here's your upside targets. Now the downside targets. I think this has maybe a little bit of consolidation. At this kind of break, this risky entry, and then consolidate in this level, in this area here between 70.47 and 66.34. Personally, I think there's a consolidation there, but I mean, we could get a rip. Who knows? The market can do whatever it wants. Now the 9-day EMA will break down and give us our first. Tomorrow it'll be here. It'll give us our first entry to the downside. You can play the 9-day down to the 21-day. Play that down to the 100% fib on the trend-based fib, and then the 50-day will be right around here at this next fib. So there's a good confluence there. So this will be a pretty tough level to break. Very, very tough level to break. And if we do break this down, then we'll just play the fibs down. But I don't see any of this down here, this 58, even anything under 60 happening within the next couple of weeks, personally. I mean, the range, this was a pretty big candle, and the range of this candle is just about $2. This candle, the range is, just about $2. Same thing, $1.74. So I don't see, this thing doesn't move like crazy, maybe $2 on a good day. So keep that in mind when you're playing this. If we have 5 days till expiration on the 18th, and you know that it moves $2 a day, then the most that it can get is $10 between now and Friday if it has gappy green days from now till the end of the week, right? So 66, the $10 to that is 76. I think that's way too far out personally. But if we go to the 75s, I mean, they move like crazy on Friday, but you would have to already be in the play to catch that move. Now for Feb 18, I think this 68 call is very interesting because look at how much volume came in. It was 9,000 in volume and 1,300 in open interest that came into this on Friday, and that's the 68 call, right? Looking at the chart again, I mean, 68 is just a $1.50 away or so, right? So it's not too much. It's not unattainable, especially if we get like 2 or 3 green days. It'll give us 68 pretty quickly. And it's a 5-cent spread on that, so I like that. I think that's great. Let's see the next one that I like. I mean, pretty much any of them in the money, especially the 66, I think is the safest. 1 penny spread. It moved a lot, and I think it has more, especially since it'll go from, with a 50-cent move, it'll go from $1.66 to $1.91 on the ask side. So this is a good one. I think this has a wide spread, but you can play it if you like. The 66.5. The 67 has a wide spread, but you can play it. The best ones, I think, in my opinion, are 66 and 68. I look for tight spreads, so I like that, especially the 68 with all this volume coming into it. So that's a good play. February 18th, 68 call. If we look at March, the March 69s are good, and I immediately gravitate towards this volume, right? That March 69 is good. With a 17-cent spread, I mean, it's, the spreads are quite wide on this, but they'll tighten up. I think if more people play it as time comes, goes on, it'll get a little bit more tight. The 70s are okay. I don't like this too much for March. I like these February's, these weeklies. Obviously, weeklies are more volatile, so maybe they're good for like a day trader, or like maybe one overnight swing until things happen. I saw something about Putin giving his people the orders to make moves on the 16th, right? And that was publicized on the internet, so it might be a fake out, it might be a psyop, but we might get something from Monday to Tuesday. So let's stick to the 68 and the 66, and then if in a couple of weeks you see that there's more upside movement on this, then we'll start looking at the 69s and 70s for March. All right, so the next one on my list is JPM. JP Morgan, which banks were moving pretty well on Friday, on last week and this year. They've been, ever since it's kind of bounced, they've been kind of leading the market a little bit. Now, what I see here is obviously massive gaps, and then it kind of pulled back to the, retraced the move, and it's kind of forming this cup, right? This kind of cup with a handle. As you can see, we rejected the 50-day SMA, which is this red line, a bunch of times. And so if we do take out the 50-day and we hold it, then we got the upside moves on 158.68, which is a previous resistance, previous strong confluence level, which if you look over to your left, look at the blue line and follow all the way to the left, you see how many times we rejected at that level. And then 161 would just be the top of this candle, and then 176 would be the gap fill. So I see more downside for this right now. I see more downside. Well, to finish my bull case, if we look, I gotta look at the weekly. If we look at the weekly, there's been a bunch of times that we've kind of held this level as support. 3 times so far. We kind of fell through it and then gapped up above it, which is, if you follow Wyckoff theory, it's called a spring, where we kind of break through the support, but then respect it strongly, and that spring tends to be the beginning of a strong move upside after kind of a sideways, rangy kind of price action, as you see here. Now, obviously, this is a very large range between 172, 173, and 146. It's a 28-point range. I don't even know if that math is right. 173 and 140, 148. Is that what it is? 140, 146. Yeah, 27 point range. So it's a big range, but this looks like a clear spring. So what we need to do is take out this 50-day. The first thing we need to do is take out this 50-day before we can get bullish. That's the very first thing we need to do, is take it out and stay above it. So if the 9-day holds as support and this 21-day starts to turn around, then we can worry about taking out the 50-day. In the meantime, it looks very bearish just based on some of these moving averages. Take out the 9, go to 21. Take out 21, go to this previous level of support. Underneath that, we go back to the strong level of support for a retest. And then if we go below that light blue line, then then all bets are off, right? For JPM. So, and they don't have earnings or anything happening. I think banks are allowed buybacks, so there might be a positive catalyst there. I would check if JPM discussed how much of a buyback the Fed is allowing them before you form your thesis. But I see more downside in the short term. At least come down to test this 21. Previous levels of resistance at this 21, and maybe kind of form a base here before we try to take that 50 out. Next one is let's look at the chains real quick. JP Morgan, a bunch of volume came into the 157s for this week with a 16-point spread. Not the best. The 150 puts are pretty stacked with volume and OI, and the 9-point spread, 8, 9, 10 point, 11-point spread. So I like the 150 puts for this week. All the puts moved, obviously, on Friday. If we go into March, all of those kind of moved on Friday as well. So just keep that in mind. March 160 might be in play, but obviously we need to break this 50. This 50 is going to be that's the key level that's going to trigger us to kind of work our way to the upside. And JPM is one of the leaders. It's JPM and Goldman Sachs, and Bank of America are some of the leaders in the broader markets and the ETFs. So as long as SPY is red, then this is probably going to be red. Usually, sometimes you'll find that like when the market is down, either energy or financials are usually up, and people were hedging with them. But it looks like financials have been following SPY the past couple of days. Kind of follow SPY a little bit. So let's just keep that in mind. Right now, I'm bearish on it. XLF. So I'm bearish on JP Morgan stock because it looks like shit, and it looks like there's more downside, especially with that 50. But XLF, which is the ETF for Spider's financial ETF, it has the same kind of cup and handle. We kind of filled this gap already, and we rejected at these previous levels. Um, so I was looking at XLF as part of our call on last week. It was forming this rising wedge, which is very bearish. And I said that if we kind of break out of this rising wedge, we have to hold this pink line here. We played XLF. Let me look at the play real quick, just as a recap. And I'm just scrolling through the channel, the gold mine and the high risk channels. We played on the 7th. I called out XLF weekly 40 and a halves and 41 calls. And the 40 and a half went from 35 cents to 89 cents for a 254% return overnight. The 41 calls, which were lottos, went from 15 cents to 47 cents overnight. That gave us 313%. So from this day to this day. And obviously, if you would have held a little bit more, then you could have and sold the peak somehow, which you know how hard it is to sell peaks. But if you did, then I'm sure there was a little bit more meat on the bone there. But anyway, it kind of did this rising wedge breakdown. It bounced at this crucial support level. I just want to go into the intraday to see what it did at this pink line. Yeah, I mean it bounced at it. A bunch of buyers stepped in here, but now it's kind of looking to retest it. So again, this level needs to hold before we can work our way up. If this level holds and we get above this 9-day this 9 EMA on the 30-minute, we can get above this 9, right? Hold this level, get above this 9, and then try to get above this 21 on the 30-minute. Then JPM daily will look a little bit better, right? Then the daily, if that all happens in the daily, then we'll be kind of in this area where we can kind of retest that 50-day. So these two are related, obviously. So just keep those in mind. I don't have strong targets for this. I just needed to hold this 39.87 before we can continue to talk about it. So we'll probably talk about it on homework on Tuesday. Okay. The next one is Starbucks. Starbucks is very, very clean price action. As you can see, it kind of puked down, and it's been forming this downside move. Now, all of these are targets to kind of break through for shorts. You know, all these short sellers set their stops at the low of days. If you play strat, then you know we can break through all this in one day if we get good volume, good catalyst, etc., etc. But in the meantime, I'm leaning bearish, especially since we kind of formed this range. So downside puke that we just saw, and then it kind of has been basing and trading within this range. If I look at the weekly, then this is going to look like a bunch of dojis, right? Let's look at the weekly. Let's change this. Yeah, it's just a range. If we look at the, I mean, it's not enough for a month, but if we look at the range, it's just kind of buyers and sellers have been fighting within this level. You can see the range contracting. So let me just, if you look at the high of the body of this candle and the high and the low of the body of this candle, and then the high in the body of this candle and this candle, you can see that the range contracted. It got smaller, right? It got a little bit smaller. Even though the dojis kind of came out to test these previous levels, but the bodies themselves got smaller. And on this one, we kind of just been puking, right? So two things can happen. Let me go back to the daily. Obviously, stocks can go up, down, or sideways. This has been going pretty sideways, so I think it's time for an up or a down. That being said, let me just adjust this a little bit. Just that. All right, cool. That being said, I see we came down. Now, mind you, we're in a downtrend. Don't forget that we're in a downtrend. Okay, came down, formed the shoulder, came down, formed the head, a higher high. Right there's your higher high. Came down, formed the lower right shoulder. So we have a left shoulder that's up here and a lower right shoulder here. We have these moving averages, this 9 EMA and this 21 SMA. That needed to catch up to the price action. Right, we needed these to catch up to the price action after this massive drop. So now that they've caught up, we've kind of consolidated, they caught up, and it looks like now we're forming lower lows. Prices respecting the 9 EMA, and we broke through this light blue line and closed down below it. Now, all that being said, I have a target of 91. If I go back to the weekly, you'll see where that 91 kind of came from. There's a gap under here. And you see, boom, 1, 2, 3, 4 days of resistance before it kind of gapped up. And so I think that we're going to come back to fill this gap. And I think this is going to be a very, very strong support, this level here. So So that's my target. There's a lot of downside. I mean, obviously, all this downside. We broke all the support, and so I think I think we have more, just a little bit more downside. Break of 93 of 93.36, low of day, gives us 92.08. After 92.08, we fill that gap down to 91. If we take out the 9-day EMA to the upside and hold it, then we can try to test the 21-day SMA, and then from there we can try to test the shoulder, and then from there we can try to test the head or the top of the range, and then from there, after all of this traffic, which is very, very strong traffic, then we can work our way to 100 and then work our way up. But I don't see none of this upside happening this week. So keep that in mind. If we look at the chains, then there was a bunch of buyers in the February 18th 100 calls. These probably were day trades. I mean, I wouldn't have even day traded it. I mean, look at this. This is disgusting. So they probably lost some money. If we look at the put side, I mean, the put side moved pretty well. This isn't the most liquid expiration, but the 93s went 86%, the 92s went 109%. If you like the put side, I would probably lean towards this 93 just at the money. If you like a little bit of risk and want to day trade, then maybe this 90 with a decent spread, right? So 90s or the 93s, or even the 91s. Any one of these, 90 through 93, I think is pretty safe. I wouldn't go out to March with puts because the market can turn around and rip your face off pretty quickly. So I would stick to this week, 90, 91, 92, 93 puts for Starbucks. The next one's KOS. This is another energy ticker. Now, I'm not going to spend too much time on this. And the only reason I'm not going to spend a lot of time on this is because, so we got like kind of a triple tap vibe, kind of that, resistance, bounce, and consolidation getting moved up by the moving averages. So it's very clean price action. We're a little bit extended from the 50, which is okay. I expect it to pull back a little bit to this level here, where it's going to meet the 9 and the 21, and then kind of rip. If it doesn't rip through immediately, then it'll pull back to this level and then rip. Now, the reason why I'm not going to spend too much time on this is because, and again, super duper clean price action, especially on the weekly. We got some of these higher levels, but this is a $5 stock. Let's go to the daily. This is a $5 stock. Break through all this, do all this stuff that we expect to go from 488 to 509, right? Like a 20-cent move. Now, if in options, that 20-cent move isn't going to give us too much. Feb 18, $5 calls they moved 280%, and they went, the bid ask is 5 cents. And then the March 18, $5 call, 45 cents to 50 cents. This thing is just such a slow mover, and and some of these are pretty liquid, but it's such a slow mover that I just feel like you park some money up in something that's going to give you a little bit more, right? More volatility, better moves. And so that's why I'm not going to spend too much time on it. I think the price action is great though. So with Chaos, Cosmos Energy. Next one is Baba. I think I just threw on this list. This wasn't requested by anybody. Nobody asked for this. But I like it because we held the support here. So we were looking at a triple tap to the downside, and it totally it was on this day. This was a Sunday, I believe, or this was 127 was a Friday, and whatever. I think, or maybe this was the Friday, and then this was the Monday. Yeah, Friday and Monday, and we discussed Baba, JD, and I think PDD or something else that looked similar on this day, thinking that it was like a triple tap to the downside. And it kind of gapped, and it did a bunch of weird Chinese ticker stuff, and now it's here. So Baba, we played Baba this week. Baba went from we played it on the 7th. I called it out, which was this day. I saw a reversal pattern forming, and I saw a bunch of other things in the change that told me that it was going to be good. So I called out a 120 call at $2.72 at 3 o'clock on this day, and the very next day it went to $4. So I think people took profit on this day. It would have moved all the way up to $128, $128 on the stock price, which would have probably been I don't know, $6 or something. Just taking a guess. So It could have easily been 100%, but we took 68. I personally took 68% on this one, because I don't trust Chinese tickers. It went into the moving averages, and so I expected it to come kind of down. But anyway, Baba's good. It's forming lower highs, holding support. This is going to be a very, very tough level to break, this 121.95, because we have all three of the moving averages kind of on top of each other right here. If we do break this level, then we have 119.74, 116.85, 113.73, and 111 to the downside. To the upside, we have a break of the open of day, break of the high of previous day, and then we got this level where there's just a bunch of reactions. If you look over to the left, you see a bunch of reactions to this kind of price at this level. And then we have 135.74 for Baba. Now, if we look at the chains for this week, the 130, so obviously the call side got killed on Friday, but the 130s look pretty good. There's a decent 10-cent spread. As you can see, this is more volatile, so you see how the theta is much higher than the delta, right, compared to those energy tickers. So that's something that we discussed there earlier. A bunch of volume came in, 10 KOI on a 130 call. 130 call is not so unattainable. 130 would be pretty much this level right here. 2 green days can give us 130, right? Or one big green day such as this one that has a range of $8.37 can give us 130, or can give us some profit on these 130s. On the put side, and this for this week, guys. On the put side, the 119s look pretty good. I would like more volume and open interest. The 120 puts have a lot of open interest and a bunch of volume coming into it. 15-cent spread, not so bad. So the 120s are looking pretty good. If you think that we have more downside, then maybe the 110s are good too, although I think the 110 is too far out. And again, with those three moving averages kind of sitting there, I mean, we can probably get it, but we would probably need the retest of the moving averages, like come down, retest the moving averages, and then flush, right? So keep that in mind, guys. Keep that in mind. The next one, this is another request from the server. SOFI. SOFI, to me, looks very bearish. It's been forming lower lows and lower highs for a long time, all year, and since it peaked in 11/11, and even on this previous peak in June. And if I go back to the weekly, it's just been forming lower highs, right? Lower highs, lower lows. So it's in a clear downtrend. Very, very clear downtrend. So I wouldn't go against that downtrend. If things are in downtrend, I would just play puts. Keep it simple, right? Now, the risky entry for the call side is up here, at 1274 would be the break of the day's open. Very, very risky entry. You see all the selling pressure here is why I call it risky. But break of 1274, we get, and I mean, we've been forming higher lows on these days, right? Higher lows on these days, and higher highs ever since kind of this day, the third, higher highs. So we're in a short-term uptrend. How sustainable that is, I don't know, because we have this kind of falling resistance line here in this channel, as you can see here. So risky entry here, take 1324, 1355. From there, we go to the 50-day SMA. From there, we go to these previous levels. If you look across to the left, you see a bunch of times it kind of touched this level. And then we got this kind of pivot here, right? I don't see upside to this, so I favor the downside, especially since we're at the top of this channel. Take down the 9-day EMA, 21-day across underneath the 9, bring us down into 1171, down to 1136, down to the bottom of the channel. SOFI to me is clear downside. Bunch of bulls in this. 43, nice spread, but this thing moved 0% on Friday. Maybe they just created this chain on Friday. I mean, last week, who knows, but this thing didn't move at all. We got some big movers, 200% over here. So from 1 penny to 3 pennies, 100% over here. So from 2 pennies to 4 pennies. I mean, it's up to you guys. Whatever you guys see in it. I like it to the downside. I'm not going to waste my time or money playing this. The 10.5 Ps look okay based on the spread and the volume open interest. The at the money Ps are probably best. And SOFI has paid us in the past. I think we played it two or three Mondays ago when T called it out. It might have been like this day, right? This day. So, but right now I see more downside. So, and we have earnings. So, I mean, maybe we'll see what happens. You got your upside targets and downside targets for SoFi. I don't really love it. Intel. So for Intel, and I know we have a play in the server for Intel. Let me just look at it real quick. I'm looking on my phone. I'm going into the high risk channel, I believe, is where I saw it. I saw T called on the 8th. He called a Intel 49 call and an Intel 50 call for last week expiration on the 8th. Right, the 8th was this day, so it went from a low of 47.90 on to the next day a high of pretty much 50. So you made money on that move, on that overnight swing, right? Now I think he gauged it well. He found that kind of rising support line. We saw that we were at support, and I bet you a bunch of volume came in. The dividend payout is done, and so now we can go back to test that 9-day EMA, which we did, and we broke through it. So that was a great call, monster call. So I know people jumped in it. I know a bunch of people made money in the server. And again, if you're not in the server, go ahead and visit gorushgang.net. Check us out. I think this website needs some updating, but we got a bunch of testimonials from members who are currently still trading with us. Who have, I mean, a bunch of the people in this group in this page here have leveled up like crazy. If we go into join us, we're running a current special where you get 7 days free of full server access by clicking this Fun Pass 7-day free pass at gorushgang.net. And then, but the Watchlist channel and some other channels will always be available to you, whether you decide you want to pay or not. So, on the house, guys. So, we're still in this big bear flag, right? Big flag pull coming down. And now we're kind of consolidating. We broke that support, those lower highs, those high lows. We kind of broke through that expectation of holding the support. And now we're here, right? So I think for Intel, I mean, it might just be as simple as kind of coming back to test, this low here or this low here, which I have targets for. If we do break down those levels, then we have some previous lows. Where are they? I don't know where they are. But anyway, we got some lows. We got some lows at 45.20, 45.20, 44.23, 43.62, $42. And then the fib at 40. So we have some levels to, if we continue this kind of downside move, we got some levels to the downside. Now, if we break above the high of the open of day and break above the 9-day EMA, then we can come to test the 61.8 fib, which will reach the 21-day EMA right around this level. So it's going to be a very, very hard level to break. And then we can kind of try to test the 50% retracement of this downside move, which will also be the 50-day simple moving average. So, I mean, looking at this, I think there's much more downside based on how difficult these upside levels are going to be to kind of break, right? And we didn't break it on this day. We didn't continue the move on this day. So I think there's more downside personally for Intel. But the market can change its mind tomorrow if it wanted to, right? And in terms of the chains on a call side, I would play at the 49, 48, 49, keep it simple. 49.5, maybe the 50s, 50 and up. I wouldn't go below 50 for this week. On the put side, same thing. I would stay relatively close. I would get as far out as 45. I wouldn't go any further than that. Even though I'm charting that it has more downside, but I just don't know if it's going to do it in 1 week. So keep that in mind. And then again, I wouldn't really look into anything in March just yet. Although if you do want to play March puts, I would stay as close to the money as possible. Maybe get to the 45s or the 42.5s look okay, right? Between 50 cents and 53 cents on a spread. 13K OI, 456 contracts traded on Friday. So that's Intel. The next one that I have is LMT. LMT is part of a series of kind of war profiteers. Lockheed Martin, they make money when the world is fighting. If I go to the weekly, then we see there's a weekly resistance level, big, strong level to break through here. Same thing here, right? On a weekly. So that's where my level came from. Actually, if we just look all the way across the blue line on the screen, you can see that even here and here and here, it keeps rejecting this line. So I'm gonna activate it and I'm gonna pull it back a little bit more, right? Just a bunch of times where we've kind of been at this level in the past and rejected. So although I'll say we do have a good catalyst now, with the Ukraine conflict being all over the news, and news drives sentiment and sentiment drives price. So technically it should reject again, but the stock looks good. I mean, it's been right in the nine for quite some time. Tested this level a bunch, came back again, tried it, failed, broke down to the 21 day, and then bounced back up above the 9. So they're very bullish. We closed above the weekly resistance. Hard line, although it's just really all this area is a weekly resistance area. I think it's 400. I think 400 is the resistance level. Excuse me. So I'm bullish based on what I see. Break a 400, get 402. Break a 402, 410, 410, 417. The range of this candle here is $17. The range of this candle here is $13. So this thing makes moves. So catch it on a day where it's not doing one of these, but it's making moves, right? Now break down this level, and if you look across the blue line, you see kind of a bunch of dojis forming at that level, right? At the tops of the bottoms of dojis of bodies forming at that level, right? This one, kind of this one, and then these bodies here all kind of respect this level here. Below that, we got this previous support level. You see all the buyers around this level. If you look to the left, also this is kind of where the 21 day is going to be. Maybe up here by tomorrow or Tuesday. Below that, we got this previous resistance over here that might act as support, 377.46, and below that we have this previous kind of support and pivot at 369.47. In terms of the chains, volume exceeded OI on a bunch of these. A bunch of these went 900%, 100%, 200%, 500%, 700%. So the spreads are a little bit wider on these. This one's okay. This one's pretty tight, 10 cent, 5 cent, right? 415 and 420 calls, 5 cent and 10 cent spread. Some of these are a little bit wider. So with the wider ones, if you want to play and you want the safety of at the money calls, with these wider spreads, you want to set your bid close to the bid side. So like I wouldn't just hit market because they're gonna fill you at 460. I would set my bid to like 440. You'll get filled at 440. Set it to like 430. You'll get filled at 430. You just need more time. Set it to 425. You just need some patience, and I'm sure someone will fill you at 425. You can set it below the bid if you have a lot of patience. So, but I wouldn't pay anything above like 440 on this, unless you want a super fast fill on the 400 call. Now, again, that 400 is a tough level to break. So, if you do want the 400 call, being that it's a tough level, I would probably stay as close to the money as possible. If we do break it and find a base above it, then you can start thinking about the 410s and the 415s. The 410, which has a pretty good spread. 410 has a pretty good spread. 415 has a pretty good spread. 420, quite a bit far out, but for this week. But we have the catalyst there with Ukraine and Russia. So on the put side, I wouldn't play the put side on this. I mean, these are super illiquid. I wouldn't play the put side on this. I don't think that it's going to go down this week. Maybe you can play the puts on March. Like some of these moved up 10%, 30%. Maybe you can play the puts on March, but I wouldn't play the put side on February 18th expiration, personally. All right, so that's LMT. Next one is gold. Gold broke this downtrend, this kind of downtrend, this short-term downtrend that it's been in, right? Where we formed lower highs, and then we kind of bust through this pivot, and we're working our way through this pivot, right? So, excuse me. So we kind of put in a double bottom, forming higher lows right here, lower highs, higher lows, break through the previous falling resistance line. So take out the high of day, and we can try to reach this pivot on the left. If you see where it touches, it touches right there around November 15th. If you look even before that, around like August 8th or so, that's kind of where we gap down. So this is an interesting area. It's 2120. Above that, we got 2158, which is a previous level. If you look to the left, where there's a bunch of kind of price action above it. Then we got 22, which is, same thing. There's a bunch of kind of price action below it. 2250 and 23 are psych levels. $22, $22.50, $23 psych levels. To the downside, we have a break of 20 psychological level. So I mean, I wouldn't play it here in this range. You see how it gets choppy, and then it kind of makes the move outside of this choppy zone, right? This box right here. So I would wait till it comes back to this 22, which is pretty much where this previous level is here, where this kind of gap is here, or obviously above the high of day, right? But break of 20, we can kind of test this falling resistance line. We can get back to test the low of day, 1937. So 20 will probably be where the 9 EMA will be tomorrow. 1937 to 1950-ish will be kind of where the 21 SMA will be tomorrow, and the 50-day will be at kind of 1882. So that's where these levels come from. And then this level, if you look across to the left, you see a bunch of support and resistance at this level. And then 1765, you see where the double bottom is. So this thing has earnings on the 16th, which is on Wednesday. So that's a catalyst. Gold used to be a hedge to the market. It was kind of detached from that for a bit because people were using Bitcoin. And then I think after that, things are getting risky, so people were using bonds. So just keep that in mind. Gold is one of those that kind of gets rotated into and out of when the market goes in and out. But technically speaking, I mean, these are your levels. I don't know how the public likes gold now. I don't know how the news talks about gold now. So just keep that in mind. 21 call got slammed. The 22 call got slammed. Gold is relatively cheap. These weeklies are very cheap. So, but you want to catch it when it has big moves. I would play between 21 and 22, anywhere over here. I think we played out the money before and we got a big move. I think like 100% or 150% or something like that. But 22 and a half will give you a big move. Even this 23 will give you a big move. But you need big candles. You need like a candle like this again, or a candle like this. You don't want these small choppy candles. Just because it broke out of this triangle, I don't think that it's gonna continue to rip. I think that we're gonna have a inside day based on this earnings being the next day, and then from there, I think we're gonna have the big move down, a big move up. So I wouldn't even touch it till after it reports on Wednesday. March, and then everything looks bullish. I mean, based on all the open interest. Although looking over here, there's a bunch of OI in the put side, so pretty close between 21 and 23, 24, down to the 17s for March. So there's your plays. Keep it pretty close on both sides. I wouldn't play puts this week, and I wouldn't play anything until earnings. So, but the stock is pretty right now. Next one is fun. I hate tickers like these because like you don't really know a move like that. You don't really know what to expect. Contrarian will say that it'll pull back because it's kind of gapped up so much. However, that might not be true. What's the catalyst for the gap up, right? That might not be true. So, and since it's pulled back so much, it has a bunch of sellers here, a bunch of buyers here. Like it's kind of it's indecision. Indecision after a big gappy move might mean that there's a potential change in trend coming. If we look at the weekly, then we see that this level was a strong resistance in the past. So if we can kind of form our base above that level, then I think that we have more upside. But I would just be careful. And obviously, we tested it a bunch of times from the top and then bounced. We have earnings on the 16th, it looks like. So I will watch it for a day trade. Let's see. For a day trade, just take these levels here. And now you see, typically I'll draw like the call entry above and the put entry below the candlestick. But we still have a call entry at 60.86. And what that means is I kind of want to see it form its base within the range of this candle. If it stays within the range of this candle, I think it's still very bullish. it wouldn't fill this little gap, and it wouldn't come down to retest this line. I wanted to look at this a little bit on the intraday to see kind of where it's at. Let's do the 1 hour. So looking at the 1 hour, you know, I think I think that this level is still bullish, and then I mean this kind of the bounce and buy and bullish engulfing of this candle, kind of this massive move to engulf this candle, and this is 15 o'clock. Oh, okay, so this is still during market hours. Yeah, I mean this is very bullish. Let's see, let me zoom out a little bit. So if we hold that level, then I think that there's a potential for continuation. There's a bunch of like paper shuffling next to me. I know my daughter's losing her mind right now in her room. All right, so hold this 21 on the 1 hour. Come back above the 9, hold the 9 into this day. Break above high of day, and then work our way up. For day trades, these are your day trade levels: 62.43, 63.72. Inversely to the downside, this is going to be a very strong level to break. Look at all this kind of sideways action along this level. I would be careful to take puts until we kind of break this level. So yeah, that's fun. And let's look at the now. I wanted to analyze this based on what I see with this price action, but these changes are terrible. Like I would only put money in this if you think that you're gonna get a big upside move or something. But I mean, they're super wide, no volume, no OI, not even like a great ratio, nothing on either side. Super wide. If you know how to play wide spreads, then I would go ahead and do it. But otherwise, I wouldn't. I would just be careful with how you play it. So, okay. So the next one, I'm gonna blow through the rest of these real quick. The next one is HRB, H&R Block. It's H&R Block season since everyone's gonna do their taxes. It's coming up soon. If you look at this dotted blue line, you see that it was resistance here, support. Right. We broke down through the support, and then we made this massive move. Again, this is the same kind of spring that we mentioned earlier. I think it was JP Morgan that had the spring. Let's see. Yeah, JP Morgan had the spring. So now we have another potential spring with H&R Block. Catalyst is there. They have earnings. They had earnings. They have a dividend payout here. They already had earnings, positive earnings, and it's HRB season. So quite simple. If you like it and you want to play it, and now you see kind of this falling resistance line and this strong support. So if you like it, break the resistance line. So break high of day or break open of day can touch the resistance line again. So that's the first target. Break the resistance line, we can come back to 25.30, 25.55, 26, which are all just previous pivots. Back to this 100% retracement on a fib that I drew on a weekly from this impulsive move up to where it kind of slowed down. All right, that's where those fibs are from. Now, so that's where I got my my upside levels. Downside levels, we got the low of day, and then we got the 9-day EMA, and then we got this 2368, which just looking across is just a support here, and then just look across, you see a bunch of kind of price action on it. Then we got the 50-day SMA, and then we got the 21-day SMA, and this is going to be a very, very strong support to break through. Bless you. So if you like HRB, I think I like it to the downside, even if it's just like a small pullback into the 9 before it works its way up, personally. If I remember, yeah, the chains aren't the most liquid. There's nothing here. Like there's nothing here that's interesting to me, so I'm not gonna talk about it anymore. RTX Raytheon is another warmonger company. Shout out to anyone who works for these companies. Um, Not really, but anyway, 9 day is right in the 9 day EMA. It kind of flushed underneath, tested the 50. Earnings took it up, and it's been right in the nine ever since. Now we're kind of flagging, forming this tight price action between this falling resistance line and the 9 EMA. We got a risky entry at the break of the downtrend line, and we got this is a downtrend. So we got risky entry at the break of this line here at 95.05. Risky entry break of 95.05. Even this is still risky because we're still in the range of this kind of day. The best entry will be 93.91 to the downside, which is the breakdown of the 9 EMA, where the 9 will be pretty much tomorrow. We could play that to this previous support resistance, play that down to the 21, play that down to the 50. To the upside, we have a break of this candle's high into this candle's high into 98, into 100, 98, 99, 100. My daughter's going crazy in her room right now. So I think we have some downside. Um, Maybe I don't know. We got to see what it does tomorrow. See which one wins between this falling resistance line and this 9 day exponential moving average. All right. This also kind of looks like a falling wedge, which is bullish. So let's just keep that in mind. If the 9 day catches up to it, now this is my 21 day, so the 9 day is going to be like over here somewhere. Let's see where it is. 9 day is at 93.91. 9 days at 93.91. 93.91 is right here. So falling wedge into this level here. Falling wedge into this level here and then bounce. Possibly. We'll see. We'll see what happens. So RTX. And RTX, again, they have a positive catalyst with the Ukraine vibe going on. Bunch of volume into calls. Volume exceeded open interest on this one. 19-cent spread, not the best, but again, you just bid low, have patience, and you'll get it. I would play 100 and below. I wouldn't play anything above 100. I'll play 100 and below. In terms of the puts, both sides made money on Friday. Look at that. In terms of the puts, I would probably play. I would keep it above 90 on the puts. Keep it above 90. This thing is not really giving direction, although, again, they have a catalyst, so maybe just play the calls. The 100 call for March has a bunch of, but it looks really nice too. So I think I'm bullish based on the catalyst and this falling wedge. So keep that in mind. Next one is Boeing. Boeing is another. I thought initially that they had only manufactured aircrafts, but they make warcrafts as well. So I think they make weapons too. So another darling here. Boeing is in a downtrend in this kind of falling channel, and it's at the top of the channel. So I have a more bearish bias. And Boeing is very susceptible to news. Like people, some countries make orders, some countries pull back orders. They have an issue with one of their jetliners that is constantly getting recalled. So it might move independent of the war, other war tickers. So just keep it in mind. I like it to the downside based on all that, based on this top of this channel. It's risky to, this is where the 9 is, so we have to break that down. The 21 is right there, so this is kind of a very tough area to break. 50 days right here. So this is all just a very, very strong support. If we do break this support, then we have a nice clear downside targets. If this ends up being like a cup handle vibe or a double bottom vibe or something, then and we break to the upside, then we have our upside targets here. There's a positive catalyst with the Ukraine conflict, but technically we should be going down. So let's see what happens. Again, three moving averages might serve as support, so maybe come down and then go up. Looking at the chains, February 18th weekly chains. The call side's pretty stacked. I think Boeing's one of those that the call side's always going to be pretty stacked, because people like to play Boeing. Uh, the put side is not as stacked, but except for the ones that are pretty close to the money, and but most of the chain made money on the put side on Friday. I would play 195 and above on the puts, and I would play probably the 230. I think 230 is too far for Friday. I would probably play the 220s and up, 220s and down here to 210 on the call side. We're going to March. A lot of the puts made money. Let's talk about March during homework. We'll talk about March on homework on Tuesday. Um, Again, if you're watching this for the first time, we uh, we have homework every week on Tuesday, hosted by yours truly. Most Tuesdays we'll discuss a topic, technical analysis, fundamentals, etc. Whatever you guys want. This week we're talking about Fibonacci's, and how I use them, and I'll have, if you guys use them differently, then we can obviously have you contribute. Um, so this is the ticker that we'll look at on Tuesday. I just made a note to myself to talk about this on Tuesday. To look at the March chains on Tuesday, right? To look at these March chains on Tuesday, see if there's something more interesting that pops up. The next one is KTOS, Kratos Defense and Security. So again, another company that might benefit from this conflict. Now, keep in mind, massive downtrend, massive downtrend. I don't like to play reversals. I don't like to, I've tried doing that and I get lucky sometimes, but we don't like to play reversals. We like to play the trend. Uh, so with KTOS, we're in this massive downtrend, and then we kind of form this, you know, let's call these two lows a head, one shoulder. Then we got the head down here, and then we got these two lows as another shoulder. You can see that it's kind of just based on the way that these peaks, these valleys are. They're kind of getting lower, shallower rather, higher, right? Shallower, higher, into this kind of neckline, this blue line. And the 9-day EMA has crossed above the 21-day EMA, SMA, and price is kind of holding that 9. So that's very bullish. We have 1, 2, 3, 4 taps with the consolidation. So if we can consolidate a little bit more, maybe these moving averages could bring the price up above this resistance line into this gap, with a positive catalyst such as, Ukraine. So potential upside move within a big ass downtrend. Um, Now we have upside levels of a break of day high into the resistance line, break of resistance into this 1786, which is this high, break of that into this gap, into the 50-day SMA and previous support. Strong level to hold, strong level to break here. This is just very clean price action, but we'll see what happens. Breakdown of 1692, which is the 9-day EMA, breakdown 1682, which is the 21-day SMA, break down some previous levels of resistance, of support here at 1662, previous levels of support here at 1647, previous levels of support at 1611. I don't have any bias. I have no bias, but both look good. I think it has more upside though, based on these higher lows. But both look good, but I have no bias. The 17 and a half for this week is pretty stacked, relatively speaking, compared to the rest of the chains. 20-cent spread, so bid 35 on this, or 30, or 37, or 30, whatever, 40 at most, no more than 40. Definitely not market. You can bid 30, wait, have patience, and then immediately sell at 50. You do that a bunch. That's how you manipulate the chains. This isn't liquid at all, so maybe don't play options on it. But if you do just play the call side for this week, 17 and a half. This is another one that we just kind of wanted to highlight the price action. But I wouldn't play options on it. And again, this is an option trading server, so the price action is pretty down here. It's pretty with clearly defined levels, but So the next one is GD, General Dynamics. It looks like it has kind of a inverse head and shoulders kind of vibe to it. 9 days sitting here at 212, 82, 21 days at 211. This is a previous level where if you look to the left, a bunch of support and resistance, and then the 50-day will be around here. So these are key levels to break. I think this looks like a triple tap to the upside with some consolidation. Break of 214.97, risky entry. Risky, 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 risky. Risky, right? Take out the 216.13, which really should be this 216.21, previous high. And we can see 218. I like the downside better, but there's a lot of support down here with this 9-day, 21-day, 50-day, and all these previous levels of where it bounced. So super bunch of support down here. I like downside, but I don't see it going down. And then it's just in a strong uptrend. So hopefully, for anyone who's bullish, this will continue and it will go in your favor. Let's see. Right. And this can also be kind of a spring, right? It took out all the support. It took out all the support, bounced and gapped. And look at all these buyers down here. So it'll probably never get to 200, but if it does, they'll probably buy it right up. But who knows? 218 expiration. Not so much volume in OI, but that's okay. If you like it, take it. Bid low, same thing, just bid low. These are very wide spreads, extremely wide spreads. So just be careful when you're entering these plays. I don't see much on the downside for this. On the March 18th, I see same thing, pretty widespread. So just be very, very careful. Keep it close to the money, get in and out whenever you see profit. But that was another request from the server. So there you go, ladies and gents. LHX, which I think might be another wartime ticker based on the person it came from. Kind of has that Boeing look to it. Let me zoom out a little bit. It kind of did like a inverse head and shoulders. Here's a shoulder here, head, shoulder, retest this area, and then kind of bounce vibe to it. If I go to the weekly, where I drew my fibs, I drew from uptrend, you draw from top to bottom, whatever, and we came to this 50% level and we tested it, and now we're kind of working our way up out of this 50% level on the weekly. Big bullish engulfing. Well, not really, because we didn't form a lower low on this day. We have a higher low, so it's not really bullish engulfing. But anyway, big strong candle, breaking above previous resistance. I'm sure there's volume. Look into it yourself. Break this downtrend line and get into this 224.13 level. From there, these are your upside targets. Downside, we have the 21-day SMA, the 9-day EMA, 50-day SMA, previous support, previous support, previous support, previous support, previous support. So clearer levels to the downside. Bullish catalyst with Ukraine can give us some upside move as long as we break out of this downtrend, falling resistance line. Let's see. 50-cent spread. 50-cent spread. Holy moly donut shop. Wide spreads on both of these, so just be very, very careful. Just keep it close to the bid if you want, and have patience. Do not chase. This thing does make rangy moves. It put in a $8 move on Friday. It put in a $12 move on whatever this day was. It put in a $10 move on this day, but it also puts in sometimes $4 move here and $4 move here. So be careful that you don't catch it on a day where it puts in a $4 move. It looks like it might want to put in a resting bar or something here, just like something small here, before it makes the real move. So keep that in mind. We'll look at it again on Tuesday. Or rather, I'll look at it again tomorrow, but then we'll look at it again as a group on Tuesday. So the next one is HII. I don't know what this is. I mean, it might be another, based on the person who requested it, it might be another wartime joint. Possible triple tap on the downside here. Potential triple tap. on this 178.98, which will give us our put entry. If it does kind of break and hold, that's your put entry. Down to 175.58, which is this low here, down to the bottom of the channel, down to the bottom of the channel over here, right? On the upside, we got a break of day high, which will be kind of where the 9-day EMA is, break of previous resistance. Then we got the break of the 50-day, and then we have the 21-day, which might force everything down. So just be very, very careful. These are your levels here. Based on a triple tap, we might have some more pain to the downside. Based on the catalyst, we might have some tests of this upside. So again, that catalyst being the Russia-Ukraine conflict. I'm not sure how well this ticker is tied to that, but no liquidity in the chains whatsoever. 9 contracts traded on Friday. Open interest of 13. $2 spread. So just be very careful playing these. But if I consult with my crystal ball, it looks like, personally, I think there's more downside to this had it not been for the catalyst. So we'll see. We'll see how it shakes out. I don't like these, again, options, gold rush options trading, and I don't like the options that I see here. So I'll talk about it more. MU is one of my own. Now we're gonna get to the part where we're gonna just these are the ones that I want to look at for us. Get rid of all this. Actually, I'm not gonna get rid of it. I'm going to. This is my drawing set that I trade with. I'll create a new drawing set and call it Clean Slate. So MU is above the 50, above the 21, above the 9, with the 21 pointing down, crossing through the 9, or rather the 9 pointing up, crossing through the 21. So that's bullish. 21 needs to kind of turn around. I sense that with these 2 days of sell pressure up here to match all this kind of sell pressure over here, I think that we get forced down to test the 50-day. So I think we're going to do kind of one of these into the 50-day and then bounce from there, right? Possibly, right? If not, then if we do get a flush, then I mean, just look for the moving averages to hold support. For this 9 to the 9 is going to be crucial. Wait for maybe it'll kind of wait for the 9 to kind of cross and fall into the 9 before it works its way back up. But MU is again with the positive catalyst. They're saying that there was a correlation between chips and the conflict in Russia and Ukraine. If Russia does go to work its way into Ukraine, then the chip supply is going to get it's going to get they're going to test it, and they're going to try to they're basically going to try to buy more chips, and it's going to make it harder for other chip consumers to purchase, right? And so that might put a constraint on it's a supply and demand thing, basically. Like, obviously there's a higher demand due to the conflict, which might drive the prices up. So supply and demand. Same supply, demand increases, price goes up, right? So we're looking for that. If we do fall into this 50-day, 9-day, 21-day kind of confluence area over here, this area over here, fall into this area, and then kind of work our way up into a cup and handle breakout, right? Again, the Russia-Ukraine thing, if Russia does break into Ukraine, knock on the door and bust through with put his boot in the door, then it might give China some Red Bull wings to do the same thing with Taiwan. China's been holding back for a long time, so it might give them the same kind of vibe to do that. And as we know, Taiwan Semiconductors, TSM, one of our favorites, is a potential to be influenced by kind of that move. So TSM, MU, SMH, right, which is the ETF. Right now, MU is showing the most strength, so that's why I like it the most. So pull back into this kind of area here and then work its way back up. So just keep that in mind. Snap. The reason why I like Snap is because we're testing that 50-day. We tested this high twice, 2 days in a row with an inside bar with higher lows. Out of this kind of break up above the 9 and the 21. So that 50, let this 9. So we might kind of reject the 50 and come back down into the 9, but the 9 might carry us to break through the 50. So that's why I like it. So let's just keep it on our watch list for now. It could be a potential triple tap, one of these, right? Here's one tap, another tap, kind of tested it. So we need to work our way back into this level, break above this red line, let the 9 come up and carry it up, right? The 9-day. Oops. So I'm gonna continue to watch it. This might be in play later on in the week. XLE. Uh, XLE is the request from the community, but also I was looking at it on Friday. We broke through these highs. We made a new high on Friday. We're riding the 9-day moving average, and yeah, I mean it's quite simple. I think. Look back. I mean we're above all these previous highs, which is why I like it a lot. Let me check the monthly. Oh, okay. It's always good to zoom out, guys. So now we have some upside targets here. Um, excuse me, for XLE. Let's see. So going back into daily. So now we got the 70, 71.7, and then we have a nice little gap into 74. Calls above 70 and a half. Puts below the 9. Very simple. Calls above 70 and a half. Puts below the 9. Remove drawing. There's your calls, and there's your puts. Play it. Play it into the moving averages. Played into the moving averages. Those moving averages are going to be very hard to break, especially with the sector ETFs such as XLE. Breakdown of this 9. Oops. Breakdown of this 9. Let me get rid of this. Into the 21. Into the 50. And then we got some of these support and resistance levels that we got to kind of break through. There's a level right here. Level right here. So those are your downside targets, upside targets for XLE. I think energy is going to continue to move to the upside, especially since there's this conflict. Kroger's on my list. It's above the 50-day and the 21-day. It closed above both after trying to work its way through the 50 in this past couple of weeks. It broke right through. We have a dividend payout tomorrow, which might bring us down to kind of test it from the upside. It's funny how these things play out, right? Like there's a good catalyst for it to test the 50-day from the upside as support, with the 9-day potentially crossing to hold it. I think somebody requested this one. Maybe somebody requested it. I'm not sure, but or maybe I was just looking at it on Friday. Actually, I'll tell you right now. I think maybe it popped up on my scanner on Friday. Kroger, yeah, it popped up on my scanner on Friday. That's where I got it. So yeah, Kroger. Okay, so Kroger. So above day high, above 42, 46.92, and then we can play the body of that candle, the wick of that candle. Those are the upside targets. Break down through the 9. I mean, the risk reward is skewed to the upside on this. The reason why I say that is because all these it's currently above all of the moving averages, and then there's so much support for this stock down here. I can actually get rid of this one. There's so much support for this stock that I think playing it to the downside will probably be foolish unless you get that big move that we need, right? This day we had a range of $1.33, so just keep that in mind. You don't get these massive like $10 days with this. You just get you get some smaller moves. So keep that in mind. I like it to the upside based on everything that I'm seeing, based on how it showed up in my scanner as well. If you were in homework with us on Tuesday, last Tuesday, which was the 15th minus 7, the 8th. If you were with us on the 8th on Tuesday, then you have this same scanner as well. I blessed the group with it. So show up. You never know what kind of surprises you'll get. Again, risk reward is skewed to the upside. I like the upside on this. Let me just zoom out to the weekly so we can kind of see. Yeah, I mean, if we're in an uptrend, strong uptrend, then why would we play downside, right? Even if you think there's some small downside pain, play the downside, take your day or two, a day trade or a swing overnight or something like that. But the way it's set up right now, I think there's more upside. And it looks like there might be earnings on the 3rd of March, so we might get an earnings run up. And Kroger is one of those that, one of those companies that probably not going to go anywhere. Let's see. The 47 call has a decent spread. The 48 call has a decent spread for this Friday. I wouldn't really play downside, but if you want, 45 and 46 look good. Decent spread on both sides. I'll probably think about playing March. 48 and 49 look good, and even the 50 looks good for March. Going back to the ticker, I mean, 50 is the high, so just keep that in mind. I don't think it's going to probably go much higher than 50 unless we get that catalyst. Some good news and earnings. And then March, I mean, it's not like it's impossible. So just look at the chart and look at the trend and look at the possibility. Measure these moves. Measure this gap up real quick. Just do it real quick for you. Measure this gap and then measure the pullback. And it shows you. It kind of shows you what's possible. Right? And that's if it continues its trend. We don't know if this is gonna happen or if it's gonna just puke. So, but that's that. So I say that to say, don't get into I wouldn't get into like a 49 call for this week. I would probably keep it above 48. These two, and even this 48, I would sell relatively quickly. I would stay if you want to swing. I would stay into this 47. If you're talking about 50, then look into into March, or maybe even April. 50 call has decent OI. So that's Kroger. The next one is, and we're getting down to the wire here. So Snap, actually, Mosaic. Mosaic is one of those that I used to chart way back in the day when my whole color scheme was different, and I was charting it down here. And I mean, look at the massive move that it made. $23 down here, down up to $47 on a weekly. So going into the daily, what I like about Mosaic, and Mosaic is another one that kind of showed up on that scanner, my scanner that I shared with the group on Tuesday, that quick strike. So congrats if you got it and you see where I'm finding my plays. Yeah, this is a company that I think they're in manufacturing or industrials or something. I'm not sure. I'm not quite sure what they're in. But I do know that it kind of goes. It doesn't move with the market, so it goes however it wants to go. It's been in an uptrend for such a long time. It found resistance here, pivoted, came down, tested the 50-day, bounced out of the 50-day, and now it's kind of right in the 9-day. Above this resistance, bounce on it, checked it at support, put in a high and put in a big rangy candle of $3.44 on this day, and now we're playing an inside day with towards the top of the range, and so that to me looks like kind of an upside H. Let's look at it on the intraday. Yeah, exactly, upside H, right? If you look at it, you hold the mirror here, right here, towards the bottom of your screen, right here. You hold the mirror, and you'll see an H in the mirror. So that's an upside H or kind of a bull flag breakout kind of vibe. So with Mosaic, you can play, if you think it's going to pull back, play the break of the day into the 9-day, into this resistance line, into this previous support where the 21-day will meet. I like the upside. Take the high of day 40, 48, 49, 50. Fast and dirty. Sorry, it's not as neat as the other ones. But it is what it is. Let's see. Activate. Oops. Edit. And then I think I have one more to go here. I think I have one more. Yeah, I have Macy's. Macy's. I called out a Macy's play last week. I don't think it shook out very well. It did give us 30%. Um, oh, before that, let's look at the chains. Uh, Mosaic has the 48 calls decent for this week. 47 call, 47 and 48. I wouldn't go down any further than that. And then for March, maybe the 50 call. 50 call for March, 47, 48 call for this week for Mosaic. It can do 50. It can do 50 in 6 weeks, and it can do 48 tomorrow if it wanted to. So that's Mosaic. Last one is Macy's. Macy's, it bounced. It gave us this double bottom down here. So first of all, Macy's has earnings on the 18th. What day is this? The 22nd. So is that the end of this week or is that next week? Let's see. That's the end of next week or the beginning of next week rather. Tuesday of next week. So we have a full week of trading before Macy's has earnings. Now, I think I called it. I called it on this day. Let's look at the day that I called it actually. I'm just looking at my phone. I'm looking at the server. I'm looking at the high risk channel. I did not love it, but I called it out on the 8th, this day, the 8th, and it gave us a nice move into that resistance. I called it out at 50. I called out the 27 call at 50 cents on the 8th. So let's go into it. And what that was for Friday's expiration, so that was a weekly. So 2022-0211 call 27. And again, Thinkorswim allows you to chart the contract. I think Webull does too. So for anyone who's interested in learning a little bit more about options trading, visit goldrushgang.net. Gold Rush Options Trading, we don't just do call outs, we do a lot of education as well. Go ahead and click join us. Scroll down to the bottom where you see the fun pass. Go ahead and click that 7-day free fun pass. If you're convinced, come in, sign up for that 24K gold. You get full access, call outs, education. You get all your questions answered live. You get some live trading. We're gonna do much better at voice trading as well because that's where the real sauce is. Our hotline, we hit 100% as the hotline pretty much whenever S and Corey and J Haas and JCat are on there. They're usually hitting 100% on SPY pretty quickly. A bunch of the homies in there just making money all day. So let's see. I called it out on the 8th, which was this day. I called out at 50 cents, and I mean I even admitted that it was just a terrible entry. You'll see it in the server. Terrible entry, 50 cents, came down, came back to even the next day, and then it even gave us an exit of about 60 something cents, 62 cents. Let's see, when did I? And then the next day it gave us a decent entry, a decent exit if we would have held it. It got up as high as 87 cents. I saw when I took it, it was like 20% profit. I was pretty upset with Macy's on what it did. I think that the 27 call for this week would have been a better play. But anyway, so far we have higher lows. I think it looks like it wants to come back down and kind of test this level here where it had previous support. So I'm looking for it to come down and test this level and form a reversal pattern down here. All the moving averages are all converged. So really, and then I was talking to S about it on Thursday night, and almost done. I was talking to S about it on Thursday night, and we're looking for, we had that 1 tap, 2 tap, 3 tap. Now we're looking for like kind of consolidation here, but this Friday candle flushed right through and kind of canceled everything. So I'm gonna continue to watch it. I want to see it kind of trade back in this area here. I'm not even gonna put levels on it. I just want to see it get in this area here before once it's back in this level above the 50-day. I'll show my interest in it one more time. Let's see. Let's go to the 1 hour. Yeah, it just needs to be in this level above this 50-day, and then we can consider playing it. Now, based on what I see, I might call something out for earnings, so just keep that in mind. So I think that's it, guys. We've been going for, I think, I don't even know how long I've been going for, but once again, visit goldrushgang.net. This is Gold Rush Options Trading. Check out the website, see what you like. Any suggestions, anything you want to say, you can contact us here. Follow us on Instagram by clicking this, and then you can go ahead and click the follow button. This weekly watch list will be posted in our weekly watch list channel. Check out our blog section. Check out our testimonials. Check out our education. If you click Academy, you got some education going on there. I think we're gonna run a sale this week, so just keep your eyes on that. And if you would like to join us, click join us. Scroll down and check out your prices. Now, some of this stuff might change, but for now, you got the premium Twitter feed for $75. The Algo Suite for $50. This is for people. These two are for people who know how to trade. 18 karat gold. If you have a premium Twitter feed, you need to know you'll get the call outs, but you need to know when to take profit. So if you have a profit threshold of 20%, you need to look at the chart. Can you make it 20? Yeah, cool. Can you make it 30%? Yeah, cool. You know, we don't want people to expect 150% out of a play that can only give 50%. So this is for advanced traders, this 18K gold. The 14K gold is full access to our Algo Suite, which includes I'll pull it up. Where is it? Our Algo Suite, which includes Trading Ticks Flow, which shows you kind of a flow algo vibe. It shows you how many orders, calls and puts, whatever the case is. Sweeps, which are high urgency orders. Golden sweeps, which are high urgency, high ticket orders, 1.9 million, 1.3 million, 1.39 million. Bullseye, which is kind of a strong call out bot, which a lot of our members have made a lot of money on. This thing has been on point recently. Scalp Ideas, which shows you, it uses the strat trading method to kind of point out entries and exits. Dark Pool, which just shows you just large orders that don't affect the market that go on a golf course, and some technical breaks channel, which I've made money on playing Boeing and stuff on this channel here. You also get access to our robot room, which is our diligence channel with our trading ticks, one of my favorite things. Swing Trade Bot, which gives you technical setups. If you want to learn how to be a technical analyst, go ahead and click on Swing Trade Bot and click into one of these and just study and look around. We have Unusual Whales, which is a beast of a service, and then the news feed and our technical feed of technical analysts on Twitter with their opinions and their charts. And our new section, which is Gold Rush Light Chat for anyone who wants to partake. We have our watch list, which is where you're watching this now, our news channel, our homework channel, which we will light up on Tuesdays. This week's earnings, which MRO has earnings, NVIDIA has earnings, Barrick Gold has earnings, a bunch of big companies, Roblox, Upstart, Airbnb, Sabre, Advanced Auto Parts, which always goes nuts, Cisco, AMAT, Crocs always goes nuts, AMC Networks, Fastly, Yeti, Palantir, which is a darling of mine, but she's for the streets right now. Walmart, Roku, Dropbox, DraftKings, probably going to do well this quarter because of the new legislation. We have our daily economic calendar, so you can know kind of what to expect. And we have the beloved memes channel. So that's it, guys. Go ahead and mess with us. GoRushGang.net. And we do this every single day. Obviously, even on weekends. Thank you for being here. And enjoy the Super Bowl.